I'm Scott Brammer with Cornerstone Wealth Management, and I'm here this afternoon with Andrew Martin, Principal of ARCUS Capital. We've worked with ARCUS Capital now for about 5 years in helping investors, clients' money in real estate-related investments, and we're going to have a discussion this afternoon about the current state of the real estate markets. So Andrew, what kind of properties is ARCUS focusing on acquiring right now for its investors?
Typically, right now, we're looking at properties that set off cash flow. And it needs to be strong cash flow, typically a strong tenant, something that we can, while we're holding or while we're trying to foreclose on a note to own the property, and while we're holding it, we want a cash flow anywhere from 6 to 10% on the property, and then get our big tick up in profits as we sell the property.
You mentioned acquiring a note, so are you focusing on buying the real estate directly, or are you acquiring the notes? How are you going through the acquisition process?
Most people are focusing on REO properties right now, and we've bought plenty of REOs, especially from the FDIC. However, the bigger discount is through bank notes, and that's for a few reasons. The first is they've already written the asset down, they've charged it down to a number that's so low that when they sell the note to us, they're actually booking a profit, even though their loss is monstrous. And so they're incentivized to get those notes off their books to show shareholders the bank's profitable. The second discount we get is that buying a note, most people aren't qualified to foreclose on a property. We have great experience in doing so. We have the team to do so, and we're not afraid of it at all. We know the exact process. And so we get a bigger discount because most buyers aren't out there when they're buying a note. There are only a few people who are bidding on them.
Okay. Well, you mentioned cash flow, having tenants. So do you have a preference towards commercial or residential? I mean, what types of properties are you focusing on?
Yeah, right now we're focusing on commercial or anything with strong tenant upside. We're certainly not scared of multifamily because of the cash flow that offsets. But unless it's a fantastic project in an infill area, we're probably not focusing much on raw land or residential properties right now.
You know, we at Cornerstone have had lots of meetings with groups going after real estate. What sets you apart from your competition?
I think mostly we have relationships with banks that many people don't have. And I would say we have relationships with banks that companies much larger than ours don't. And right now we have a reputation of closing. And so we've been able to come in and pay actually much lower amounts than maybe they could get with some other company. But they know that we're going to close, and they're familiar with us, and so they'll hand us the better discount, knowing that in 21 or 30 days we're going to do what we've contracted to do. And this is especially true with the FDIC. We are registered with the FDIC, and the moment you get registered and you actually close with them, you go on their preferred list. And the moment you don't do something you say you're going to do, you'll never buy from the FDIC again.
Okay. You know, as investment advisors, one of the aspects we look at in each investment is the risk-reward ratio. You know, what type of a risk are we taking, you know, compared to the potential return? Could you speak a little bit to, you know, the risk that you're taking in these types of real estate investments? A lot of people, when they think of real estate, they think of speculative, they think of leverage to chase after returns. Could you maybe speak to, you know, the assets that you're buying? What type of returns are you targeting? You know, what type of position are you taking?
Yeah, right now, I think it's important, number one, when you underwrite a property, to underwrite it on today's dollar. We have an absolute principle that we abide by, that we make our money the moment we purchase the asset. So we feel like the discount's so substantial that we've already made the money, and now it's just a process of disposing it. And we're very good at that process, whether it be foreclosure or management to stability, etc. We target a 25% return right now. In our past 18 months, we've blown past that number actually, but still target a 25% return, and our lowest performer to date is 22.6%.
You know, it feels like we're probably a year or two into the current market environment where there's lots of opportunities to buy distressed real estate. Any idea on how long this window of opportunity lasts?
No, we're not sure. I wish I knew. We actually felt like it was drying up in April and May, and then all of a sudden, the last 30 days, we found more opportunities than in the last 4 months combined. And so it's just a matter of keeping your powder dry, having money on site, on hand, not going after a property that you like but you don't love. Only buy the properties that you absolutely love, and they have to meet every qualification.
Well, that sounds good for investors. Well, Andrew, thank you for your time, and
Thank
we
you.
look forward to working with you.
Appreciate it.